Fund Supermart, your online gateway to unit trusts.
We're very pleased today to have Mr. Kimura-san, Fund Manager for the United Japan Small and Mid-Cap Fund, here with us today. Hi, Mr. Kimura-san. What is your opinion on the recent market conditions and the investment environment?
はい。2015年の日本株市場に
The performance of the topics in 2015 was plus 9.9%. From overall perspective, I think the return of the Japanese equity was solid as compared to the other equity indices. However, as you may know, the Japanese stock market has been unstable since second half of last year. I think the reason for the unstable market condition was due to the growing concerns over China economy, as well as global economic slowdown. As a result, so-called China-related or foreign demand-related stocks were heavily sold at the initial stage of the market turmoil started since August 2015. As you might recall, the stock market extended a further decline after the initial sell-off driven by panic sell. As a result of the panic sell-off, the market ignored fundamentals, and stocks that were outperformed were heavily sold. I think fundamentals of the individual company's business performance should be the most important consideration factor when we make the investment decisions, especially under the current ongoing unstable price fluctuations in the market. So let me explain about the key fundamental conditions surrounding Japanese stock market. I believe that most of Japanese companies' earnings results are very positive and will likely continue to be positive. Corporate earnings of listed Japanese companies are expected to grow by 14% for 2015 on the back of Japanese yen depreciation, commodity and oil price decrease, stable economic growth in North America, and the hugely increased consumption spent by inbound tourists. Looking at the macroeconomy, our concern is possibility of further deterioration in exporting sectors. I think the economic slowdown in China and the other emerging countries may add negative impact on Japanese exporting companies, and it may result in slower earning growth for those export-oriented Japanese companies in near future. On domestic front, outlook for Japanese economic fundamentals in domestic market remains unchanged. It seems like the domestic economy has entered in the virtuous cycle due to positive effect delivered by Abenomics.
Could you give us an update on Abenomics 2.0?
Last September, Prime Minister Abe announced the second phase of the economic programs. He raised the ambitious target to increase Japanese GDP to 600 trillion yen by around 2020 from 490 trillion yen in 2014. There are four key growth drivers. Firstly, steady increase of the capital expenditures as well as the increase of the consumptions as a result of the workers' wages increases. Secondly, a growth in exports through the TPP implementations. Thirdly, continuous increase in the foreign visitors' consumptions. And lastly, a strong construction investment toward 2020 Tokyo Olympic Games. Furthermore, the policymakers are discussing the introduction of reduced consumption tax rate for daily necessities when another hike of the consumption tax will be implemented in April 2017. Another discussion to reduce the corporate tax rate is ongoing at the same time. I expect those key important growth drivers and policy measures will positively support the Japanese equity market and likely to drive the growth momentum of the stock market from time to time when those are implemented.
What is your outlook for Japan in 2016?
はい。
As I mentioned earlier, the current Japanese corporate earnings are in positive shape. In 2016, I believe that the cash reserve which are earned by Japanese companies for past few years will finally start to fully circulate in the economic system through wage increases and capital investment. On the other hand, concerns over the China slowdown may continue for a while, and the change of US monetary policy may continue to negatively impact in the investment money flows toward emerging countries and economies. I believe Japan is well positioned to attract global investors' interest because the country is in the process of economic recovery and moving out from deflation under the circumstance of global economic slowdown. Within Japanese equity market, I observe that the relative attractiveness of domestic demand-related stock should grow in 2016, and consequently, the international investment money will likely enter into Japanese small and mid-cap stocks, many of which are operating domestic demand-related businesses.
What is the mid to long term outlook for Japanese small and mid caps?
はい。
I observe the attractiveness of Japanese mid and small cap stock is available not only from short-term perspective but also mid to long-term perspective. As you may know, low birth rate and aging population is continuing in Japan. It is fair to say that the Japanese economy is much matured. Under such economic circumstances, it is not realistic to expect further growth within the large and matured industries. The only way to create vital economic growth is to continue fostering a number of the new businesses in various sectors by implementing their various deregulations, even if each of those businesses are relatively small at the beginning. As you may know, Prime Minister Abe has been placing those deregulation policies since his arrival, like another famous former Prime Minister Koizumi. I understand the first Prime Minister who has implemented this deregulation policy was Mr. Hashimoto, who served as a Prime Minister since 1996 to 1998. Since then, we saw so many prime ministers have been changing hands, and each of them introduced the additional economic policies which are essentially the same. Those were deregulations to foster new businesses for the future growth of Japan economy. Those deregulation policy introduced by several prime ministers created their new businesses few years after the introduction and support those companies to grow and achieve IPOs. I believe this is a background to support the growth of the mid and small companies in Japan. In the past, Japanese stock market topics marked its historical low in 2012. In contrast, the historical low of JASDAQ index, which is the representative of small cap index stocks, was marked in 1998, more than 10 years before the lowest of topics index. It was during the time that Mr. Hashimoto was serving as a prime minister, and the small cap index has been basically keeping upward trend since then. I believe it is not a coincidence that the small cap index marked its lowest while Mr. Hashimoto's deregulation policy was in place. As Prime Minister Abe has already introduced a growth strategy in the second phase of the economic programs, new type of the businesses and companies will appear and grow the new businesses successfully in the near future. There will be more attractiveness to invest in mid and small cap stocks from mid to long term perspective.
Is there anything you would like to add on?
I would like to stress again that the 2016 should be a better year than 2015 for Japanese stock market, especially for the market environment of mid and small cap stocks. As I mentioned earlier, there has been increasing concerns about slowdown in global economy. On the other hand, we can observe the growing economic momentum in Japanese domestic economy and the relative attractiveness of Japan mid and small cap stock will be enhanced. I strongly believe that the Japanese mid and small cap equities should attract more interest from the global investor in very near future.